Hello and welcome to Livewire Markets Buy, Hold, Sell. Today we are taking a look at 5 ASX listed income stocks. To do that, we are joined by David Lane from Ord Minnett and Hugh Robertson from Centaur Financial Services. Gents, thanks so much for being here today.
Thank you.
All right, first up we're going to talk BHP. It trades on a PE of around 12 times and has a dividend yield close to 9%. David, let's start with you. Is it a buy, hold or sell?
It's a hold. Great business. It's had a fantastic 12 months or few years, but I think the best is behind it, and that dividend yield of 8.9% I'd be a little bit wary of. I don't necessarily think that they'll get the cash flow going forward with weaker iron ore prices. So if you've got it, hold it, but I wouldn't be rushing to be buying it at the moment.
Its share price is down around 5% over the last 12 months. Most brokers have a buy or a hold on it. Hugh, what do you think? Is it a buy, hold or a sell?
It's a buy. The dividend will go down, to around 6.5%. It's still Australia's largest business. We're still going to be a beneficiary from the growth that's going to happen in China. So for me, it's a long-term play, and I think you'll get both the income will continue to grow as well as the capital will grow.
Next up, we're talking CBA, Australia's biggest bank, of course. It has a PE of around 17 times and a yield around 4.4%. That said, quite a few people in the market are talking about problems on the horizon for the Big Four. Hugh, we'll stay with you. Buy, hold or sell?
It's a sell, not because I started my career there. It's a sell because I'm worried about the banking sector in general right now. I don't think what will happen in America will necessarily happen here, but banks had such a good run for 10 plus years, banking sector. I would sell CBA, and there's better opportunities elsewhere.
The share price is up around 2.5% over the last 12 months, down 6.3% year to date. However, David, buy, hold or sell?
It's a hold. I think that there are better banks around. CBA commands a premium as far as the share price is concerned. Don't really think it necessarily warrants that premium in the current environment. So I'd be looking at buying one of the Westpac or ANZ rather than CBA in the current environment.
Next up, we're talking Woolworths, trading on a PE, a ritzy PE of 27 times, a dividend yield of just 2.6%. David, last one for you, buy, hold or sell?
I think that's a sell. I think that the consumer discretionary market is heading for trouble, and I think that Woolworths, as you said, are trading too expensively at the moment, so I'd be steering clear of them.
Hugh, its share price has lifted more than 10% in the last 12 months. Investors have rushed to safeguard their cash in these defensive safe havens. Is it time for investors to take profits? Is it a buy, hold or a sell?
It's a buy. It's expensive, no doubt, but it's got 36% market share. It's got the bargaining power. I class these as these recession-proof businesses. So it will be able to get through. The dividend is low, around 2.8%, but it will grow, and I feel we've got an economic winter coming, so I want to be in those businesses that are going to get me through this.
We asked the gents to bring along their top income stock for the year ahead. Hugh, we'll stay with you. What have you got for the next 12 months?
So I'm going with Endeavour. So this, related to Woolworths, was the spin-off. Some of the listeners might be familiar with this. They own Dan Murphy's, they own BWS, so 50% total addressable market. I feel it could really do well. It has been able to increase its dividend and its earnings every year. So if we do go through again a winter and some tough times, I feel a business like that will get me through, both in terms of share and in lifestyle, to get me through the economic winter.
I was going to say, that's the last thing people will give up is the drink. David, over to you. What is an income stock that you've been recommending to clients? What do you like for the next 12 months?
Yeah, a company called Ventia Services, and they're a provider of the back-end support for the broadband rollout. They do a lot of the infrastructure behind building out office parks, etc. It's a business that's growing in its market share, provides a decent income, and also has some growth potential coming forward. So yeah, I think Ventia Services is a great business.
Well, that's all we have time for today. Thanks so much to David and Hugh for their fantastic insights. If you enjoyed the episode as much as I did, make sure to give it a like, and don't forget to follow our YouTube channel because we're adding lots of great content every single week.